Welcome to another episode of The Village People Talking, a Gen Z's perspective. Here we explore Africa's past, present, and future. Today we're tackling a thought-provoking question.
Okay, let's unpack this. When you think of Muammar Gaddafi, what usually comes to mind, for a lot of people, it's, well, a very specific image, right? Often defined by his political actions. But what if buried in there were some economic ideas for Africa? Ideas so significant they could have maybe fundamentally changed the continent's place in the world. We're talking about his idea for an African gold-backed currency, the gold dinar. Today on the deep dive, we're kind of asking, was Gaddafi actually a visionary, economically speaking, especially with this gold dinar idea? We're going to dig into the sources you shared, try to pull out the core concepts, and compare Gaddafi's big ambitions with things happening now, like the BRICS alliance. Our mission is really to help you get a handle on the history here, the context, and these ongoing, pretty complex efforts to challenge that Western-dominated financial system. We'll explore what it all means, or could mean, for Africa's economic sovereignty. You might find some surprising connections.
Yeah, and what's fascinating here is Gaddafi's vision for the gold dinar. It wasn't just about creating a new currency. Not at all. It was more like a blueprint for a massive shift, really aiming to fundamentally change Africa's economic ties with the rest of the world. The goal was to empower developing nations, and directly challenge that existing Western financial setup. He wasn't looking for small changes. He wanted a whole new game.
And a huge part of that, based on our sources, was tackling something he called monetary colonialism. That's a really loaded term. Can you break that down for us? What was the real problem he was pointing at?
It is a loaded term, and for Gaddafi, it was absolutely central. It basically describes how many French-speaking African countries are still tied to the CFA franc. Now, this currency, it's pegged to the euro, okay? But the crucial part, the part critics really focus on, is that its reserves are managed by the French Treasury. Our sources are clear. Many see this as just a holdover from colonialism, plain and simple. And it seriously limits their monetary autonomy, their freedom. They have to keep a big chunk of their foreign reserves in France. Imagine your country's bank can't fully decide its own interest rates or manage its own money supply without, getting an okay from outside. That's the reality of the CFA franc system. It shifts control and economic benefits away from Africa.
Wow. So if that's the problem, how was the gold dinar supposed to be this radical fix? What kind of independence did it promise?
Well, promise was total monetary independence.
Wow.
Absolute.
Guess it.
Like I said, this wasn't just about a new coin. It was about African nations getting the power back. The power to set their own monetary policies, their own interest rates, their own exchange rates, completely free from outside control. It meant reclaiming full economic sovereignty, making decisions based on their needs, not the stability needs of the euro or what a former colonial power dictates.
Right.
For any nation feeling crushed by external financial weight, that's huge.
And it wasn't just about the CFA zone, was it? The sources point to a bigger target, cutting down Africa's reliance on the US dollar. That's something we hear echoes of constantly today with all the talk about de-dollarization globally.
Absolutely. That was a major piece. The gold dinar aimed to significantly reduce Africa's dependence on the dollar for global trade, especially for vital stuff like oil and minerals. The idea was to create like an economic shield to protect African economies from shocks coming from U.S. policy, sudden interest rate hikes that make foreign debt explode, or dollar swings that mess up import costs.
Right.
By moving away from the dollar, they'd gain a buffer, a way to navigate more predictably, more stably.
Okay, so freedom from external financial control was key. But Gaddafi also seemed really focused on boosting trade within Africa itself. How did he see that working? Where was Africa's internal strength, in his view? And how would the dinar unlock it?
He definitely saw the continent's power in its potential unity. The core idea was that a common, stable currency would be this incredible engine for regional economic integration. Think about how things often work now. Lots of trade between African countries involves converting into dollars or euros first.
Right, adding costs and hassle.
Exactly. Costs, complexity, friction, just making it harder. A gold dinar would simplify all that dramatically, reduce those costs, make cross-border trade much smoother, almost seamless. And that smoother trade fosters deeper integration. It helps create a bigger, more unified African market that can operate way more efficiently. It can unlock so much potential that's just sitting there.
And a unified market like that it naturally leads to more opportunities inside the continent, doesn't it?
Precisely. If intra-African trade booms, then the motivation for countries to actually process their own raw materials instead of just shipping them out raw goes way up.
Ah, value addition.
Yes. It's fundamental for industrialization, creating good local jobs, making higher value products for Africa. The end game was keeping more wealth, more economic activity circulating within Africa, building a more self-reliant economic engine.
That makes a lot of sense. And talking about wealth, Africa has incredible natural resources, but often they seem to benefit others more. How did the Golden Dinar plan aim to harness those resources specifically for African development?
Okay, this is probably one of the most revolutionary parts of the whole idea. The vision was African oil, African minerals, all priced and sold in gold dinars, not dollars.
Wow.
The sources stress this point. That single move could have fundamentally shifted control over global commodity prices away from Western markets like London or New York. It would have given African nations huge leverage. Imagine if African oil prices were set by African supply and demand, backed by gold, not just bouncing around based on Wall Street whims.
That's a game changer.
Totally. And it would massively increase demand for the gold dinar itself, making it stronger and really asserting Africa's economic power on the world stage.
So it wasn't just about the currency in isolation. It was about using the continent's actual tangible wealth to give that currency real global muscle. And having gold backing would provide stability too, I guess.
Exactly. That's the theory anyway. A gold-backed currency should, in principle, be much more stable than, say, the fluctuating fiat currencies many developing nations have. This stability makes export revenues from oil, minerals, whatever, much more predictable, less vulnerable to wild swings from outside.
Which helps with planning, right?
Hugely. It allows governments to plan long-term investments with more confidence. Things like roads, schools, hospitals. Essential stuff. And another really critical point here was about capital flight.
Ah, money leaving the continent.
Yeah. A stable, valuable currency within Africa could reduce the incentive for elites to stash their wealth overseas in dollars or euros. It might encourage them to keep that money at home, reinvest it in Africa, which would be, incredibly beneficial.
It really sounds like a very thought-through plan aimed at hitting many of the big systemic problems developing countries face, especially the issue of foreign debt.
Yeah. Definitely. The gold dinar was also pitched as a way to break free from crippling external debt and the conditions that often come with it. If you have a strong, independent currency, you might not need to borrow as much in dollars or euros. That cuts down your exposure to foreign exchange risk right there.
And the strings attached.
That's the other part. It potentially frees nations from the strict conditions often imposed by institutions like the IMF and the World Bank. This gives governments much more freedom, more policy space to actually design programs tailored to their specific development needs, rather than just following an external playbook set by creditors.
Okay, here's where it gets really interesting. Because Gaddafi's vision, while very specific to Africa and, let's face it, pretty radical, it seems to echo a lot of the goals we see in other movements today. Let's bridge this now. From Gaddafi's gold dinar to what's happening with the BRICS countries. For you listening, think about how these different efforts, even with different methods, seem to be aiming for similar kinds of autonomy for developing nations.
Yeah, if we connect this to the bigger picture, you see that BRICS, with its whole de-dollarization talk and building alternative financial systems, is really trying to tackle many of the same problems Gaddafi pointed to. And these efforts could particularly benefit African nations, as part of this wider global South idea, offering new paths for development, reducing those old dependencies.
So even though BRICS isn't proposing one single gold-backed currency for everyone, they are trying to achieve similar things regarding the dollar's dominance and maybe avoiding sanctions. How are they doing that?
Well, a big part of the BRICS strategy is diversifying the global financial system. They're working on alternative payment systems, sometimes called BRICS Pay, or similar concepts. The idea is to bypass the traditional Western-controlled networks like SWIFT.
Yeah, okay.
These new systems would use local currencies, or maybe even a potential common BRICS unit. Why is that important? Because it makes African nations less vulnerable to things like unilateral U.S. sanctions. It reduces their exposure to instability in the dollar system. And you see countries like Egypt, Ethiopia, Nigeria, either members or partners, showing real interest in this for more secure trade.
And it's not just payments, right? It's also about what countries hold in their vaults, their reserves.
Exactly. BRICS encourages members and partners to diversify their foreign exchange reserves, move away from holding mostly dollars, maybe hold more gold, more of each other's currencies, other assets. For an African central bank, This diversification can boost financial stability. It makes them less exposed to U.S. economic shifts and more resilient to global market ups and downs. It's like not keeping all your financial eggs in that $1 basket.
It also sounds like BRICS puts a big emphasis on South-South cooperation, like building stronger economic links between developing nations themselves. How does that play out for Africa?
That's fundamental to their approach. Look at the New Development Bank, the NDB.
The BRICS Bank.
Right. It was set up by BRICS as an alternative to the World Bank and IMF for funding infrastructure and development projects. This is important because the NDB might offer loans with fewer strings attached compared to traditional lenders, and critically, sometimes in local currencies.
Avoiding dollar debt again.
Exactly. It helps reduce that debt burden, potentially fosters more equal partnerships, and gets around some of the policy conditions often tied to Western finance.
And that must make trade within the group easier, too.
Oh, absolutely. As BRICS countries become bigger trade partners for Africa, their focus on using local currencies for trade cuts down conversion costs and exchange rate risks. It just makes doing business smoother and more profitable for African companies. It strengthens these South-South trade ties, making them less dependent on Western economic cycles. It's about building a different kind of network.
Beyond finance and trade, what about actual on-the-ground investment? BRICS nations, especially China, are huge investors in African infrastructure.
Massive point. That's a very visible impact. BRICS members are pouring money into African infrastructure, energy, mining, big projects, often through things like the Belt and Road Initiative. This investment can seriously speed up industrialization, improve connectivity across the continent.
Filling gaps.
Right, filling critical development gaps that might otherwise take much longer to address or come with those heavy conditions from traditional sources. It offers a different path to growth.
Is it just about money and concrete, though, or is there more to it, like knowledge sharing?
Good question. Yes, the collaboration within BRICS is also meant to help transfer technology and expertise. Think about important areas like renewable energy, digital infrastructure, even modern farming techniques. Sharing this know-how can help African nations build their own capabilities, innovate internally, and achieve more sustainable development from the ground up, not just relying on imported solutions.
So all these different threads, payment systems, reserves, investment, knowledge, it seems like they all feed into a larger goal, giving developing nations a stronger voice globally.
Exactly. That's the political dimension. BRICS champions a more multipolar world order, an order where developing nations have more say in big international institutions like the IMF and World Bank, and in global decisions generally. This fits perfectly with what many African nations have wanted for decades, a fairer seat at the table.
So aligning with BRICS gives them more leverage.
That's the idea. It allows them to use the group's combined economic and political weight to negotiate better trade deals, better investment terms, maybe better climate finance agreements. It's a form of collective bargaining power, really, aimed at trying to rebalance how global power works.
Wow. What an incredible journey through these two really distinct but also strangely connected visions for African economic independence. It seems pretty clear there's this common thread, doesn't it? Running through Gaddafi's, radical gold dinar idea and the current BRICS strategy, it's this shared hope for African nations to get more economic autonomy, to use their own resources for their own benefit, and, crucially, to rely less on those Western financial systems. It really makes you think about what visionary even means in this global economic game.
It does raise an important question, doesn't it? While Gaddafi's plan was maybe more radical, continent-wide, aiming for one single system, BRICS is perhaps more incremental, multifaceted, focusing on that broader South-South cooperation, building parallel structures rather than one replacement. But yeah, both fundamentally about shifting power, building alternatives.
So the question for you listening is, how do these stories, the historical one with Gaddafi, the current one with BRICS, shape your thinking about these global economic shifts? And what do they suggest about the future of financial sovereignty for developing nations? Definitely something to chew on long after this deep dive.
That wraps up today's episode of The Village People Talking. Thanks for joining us. Remember, this is just the start of the conversation. Stay curious, challenge the narratives, and keep questioning what we've been taught. If you enjoyed this, don't forget to share, subscribe, and turn on notifications so you never miss an episode with similar discussions.